Hello everyone, welcome to Oliveboard. My name is Dinkar and I welcome you all in this session. I hope everybody is doing great, feeling healthy and fine. Good to see you on Tuesday's evening. And as you all know that we are doing our fast track revision for phase one general awareness section. And as you all know that the exam is approaching and it's just like 1 or 2 days ahead, and we will be just revising all the important current affair newses that we have already revised from January, February, March, and April. We have even discussed about the economic survey, and today we will be just talking about all the notification for the 4 months, January, February, March, and April. So all the notification which are very important, so I have taken out the gist of everything, and like what exactly you have to remember over there. So you just have to remember that thing only for the examination, because as you all know that general awareness section is a QA portion. Uh, Options will be there, so you just have to remember the very minute details regarding that. So they just go deep inside the things and they will ask you some basic things from that. Okay, they will not ask you any descriptive thing, right? So any notification will have some kind of gist, like what exactly they wanted to tell under the notification. So that I have taken out. So please be focused on the class, and do let me know if any query you are having. So feel free to get in touch with me. Okay, so before starting of the session, if I can say how many, if I can get like how many people are there, so you can say just hi hello to me, so that I can know like how many of you are there. Okay, so that I can address you by your name. So we have uh, Sherry Jaiswal. Hello, Sherry Jaiswal. Welcome to the session, and thank you so much. Thank you so much. Actually, we have not even started the session, so please let the session get started, and after that, you just tell me whether the session was good or not. Okay, and still, thank you so much for motivations. Okay, really grateful to you. Okay, hello, Shreja. Welcome to the session. Okay, so let's start with off the session right away. So this is RBI Grade B 2022 Fast Track Revision Series for Phase 1 General Awareness, and we are pledging for your success. What are the important things regarding this series is that it is Fast Track Crisp Series, basic concept understanding, very highly adaptive, and we will be providing you with the guidance. So at the last of the session, if you wanted to ask anything from me, you can just simply write your question. I will answer that. Okay, so we will have a Q&A session at the end. Okay, like anything like what to do in examination during the time of examination, all those things, whatever you wanted to know, you can just let me know. Okay, so today we will be discussing RBI notification of January, February, March, and April. Okay, so the first one is framework for facilitating small value digital payment in offline mode. So this is a notification. So Reserve Bank has published a framework that is called framework for facilitation small value digital payment in offline mode. Okay, so this will not require any additional factor authentication. Right now at every place 2-factor authentication is required. So this is a digital payment with offline mode. That means you will not require any internet connectivity or all these things. The most important things under this is that this one, there is a limit of rupees 200 per transaction and an overall limit of 2000 rupees for all transaction until balance in the account is replenished. Only this you have to remember for your examination under this notification. Okay, now retail direct scheme market making. So the RBI has released a new scheme that is called retail direct gilt scheme, RDG account. Okay, RDG account. So under the RBI retail direct scheme, retail investor like individual people, they will have a facility. They can open an online retail direct gilts account, that is called RDG account, with the RBI. Okay, so your account will be linked to your saving bank. So why this scheme is there? So first of all, the Reserve Bank of India retail direct scheme is open for the government bond market for the retail investor. That means if you wanted to buy any kind of government bond, so it will be available for the retail investors. Okay, retail investors, they are non-professional investor normally. Okay, so the main aim is to diversify the government security market. Okay, earlier because this whole government bond market is dominated by institutional investor, bank, insurance company, mutual funds, and other thing. But now government wanted that we wanted to diversify this sector, so that is why government has released a scheme that is called retail direct scheme, gilt scheme. Okay, so for the retail investors. Okay, hello Sakshi, welcome to the session. So it offers a portal avenue to invest the central government security, treasury bills, state development loans, and sovereign gold bonds. So they can invest in the primary as well as secondary market in the government securities market. Okay. Now, Master Circular Bank Finance to the non-banking financial companies. So there is a circular that has been received by the that has been released by the RBI to banks for non-banking financial companies. Okay, so this master circular is regarding bank finance to NBFC, bank who are financing NBFC. Okay, so the ceiling on the bank credit linked to net own fund of NBFC has been withdrawn. So the ceiling has been withdrawn, like how much you can give to the NBFC and all those things. So accordingly, the bank may extend need-based working capital facilities as well as term loans to all NBCs that are registered with the RBI and those who are engaged in the infrastructure financing, equipment leasing, hire purchase, loan, factoring, and investment activities. Okay, then registration of assignment of receivable. Okay, so this is related to your like export. Okay, so the norms prescribed the manner of filling the transaction with the central registry by the trade receivable discounting system, that is called TREDS, on the behalf of factors. So that as per the norms, TREDS on behalf of the factor shall be filed within the 10 days from the date of such assignment. Okay, so if the particulars are as required is not filled within a prescribed central registry, so additional time not exceeding 10 days is given. Okay, so what is this TREDS? What is this TREDS? Hello Raju, welcome to the session. The scheme for setting up and operation the institutional mechanism for facilitating the financing of the trade receivable of the MSMEs for corporate and other buyers including government department, PSUs through multiple financer known as trade receivable discounting system. Okay, so here only you just have to remember that government has removed that ceiling. Okay, now, yeah, the Reserve Bank of India has issued a registration of factor relating to the manner of granting certificate of registration company with purpose to do factoring business. So net own fund, every company seeking registration as NBFC factor shall have a minimum net own fund of rupees 5 crore. And what is this principal business criteria? An NBFC factor shall ensure that its financial assets in the factoring business constitute at least 50% of its total assets. Okay, now Basel 3 norms. Basel 3 norms. Yes, Manpreet, yeah. As factor business is 5 crore, yes. And 50% of that they have to utilize for factoring. Okay. Now, Basel 3 framework on liquidity standards. So, liquidity coverage ratio, liquidity risk monitoring tools, LCR disclosure standards, net stable funding ratio. So, the Reserve Bank of India has increased the threshold for deposit and other funds of non-bank or non-financial small businesses by 50% to rupees 7.5 crore. Earlier, it was 5 crore for the purpose of maintaining liquidity coverage ratio. Okay, what is the aim? The aim is to better align their regulation with the Basel norms. They wanted to assign there with the Basel norms. Okay, so these type of question are asked, like how much has been increased, how much has been decreased. Okay, so they will give you all these things, right? Now, Master Direction on Reserve Bank of India credit derivatives. So RBI has issued a Master Directive Reserve Bank of India. These directions shall apply to the credit derivative transaction undertaken in over the counter, that is OTC market. Okay, for that OTC market, that shall apply to the credit derivative for the OTC market. Now, transaction in credit default swap. Transaction in credit default swap CDS 5 foreign portfolio investor, that is FPIs. What is that? The RBI has issued operational instruction with respect to transaction in the credit default swap by foreign portfolio investors. So now FPIs are eligible to be categorized as non-retail user and they are allowed to buy and sell the CDS protection. Okay, so the aggregate limit for the notional amount of CDS sold by the FPI shall be 5% of outstanding stock of the corporate bond. FPI shall not sell any CDS protection once the aggregate limit is utilized. Okay. Now, Voluntary retention route, VRR, for foreign portfolio investor investment in the depth. Okay, so this is a voluntary retention route. So the Reserve Bank of India has increased the limit for foreign portfolio investor to invest in the local depth market. Sorry, just 1 minute. To invest in the just 1 minute. To invest in the local depth market under the voluntary retention route. That means here the the FPI who is investing in the Indian debt market, they are voluntarily saying that okay, we will not take out our money before this term. Okay, so now the market, the local debt market under the voluntary retention route, VRR, by rupees 1 lakh crore to rupees 2.5 lakh crore to be effective from April 1. So what is this VRR? VRR refers to a channel brought about by the RBI to enable FPI to invest in India depth market. Okay, so please remember, VRR is to invest in the depth market of India. Okay, depth market. Okay, all of the investment made via VRR are free from macroprudential and other regulatory prescription. The FPI are required to voluntarily commit to retention of minimum percentage of their overall investment in India for a time span of their own choice. Like if they invest any money, so they have to tell that till how much time they wanted to keep that money in the country. Okay, because FPIs are very unstable. Immediately they can put in, immediately they can take out. So here we wanted to stabilize that. Okay, fine. Now, Exim Bank's Government of India support line of credit. Exim Bank's Government of India supported line of credit of $50 million, important figure, to Government of Republic of Maldives. Okay, line of credit has been given up to $50 million to the Government of Maldives. Okay, so Exim Bank has entered into an agreement with the Government of Maldives for making available to the latter. Government has supported line of credit of $50 million for the purpose of defense projects. Okay, defense projects. Now, Exim Bank, Government of India supported line of credit, this we have done. So out of the total credit, whatever the credit will be given under the agreement, goods, work and services of the value at least 75% of the contract price shall be supplied by the sellers from the India. Like 75% of the value that the country needs, like whatever goods, services, whatever is required, has to be given by the India, and remaining 25% of goods and services may be procured by the seller for the purpose of the eligible contract. So the agreement under the LOC is effective from February, and under the LOC, the terminal utilization period is 60 months. 60 months, that is 5 years. Okay. Now, inclusion in the second schedule of the RBI Act. Very important notification. Sikkim State Cooperative Bank Limited. Sikkim State Cooperative Bank Limited has been included in the second schedule of the Reserve Bank of India Act of 1934. Okay, so it has been included in the second schedule, published in the Extraordinary Gazetted Part 3-4. Now Sikkim is also to be considered as a scheduled cooperative bank. Okay, so what is the benefit of any scheduled cooperative bank? So scheduled bank refers to the bank who have been included in the second schedule of the RBI Act. So RBI in turns include only those banks in the schedule which satisfy certain criteria. So every scheduled bank has two type of principal facility, like they become eligible for debt loan at a bank rate from the RBI. Okay, and it is automatically acquires the membership of the clearing house also. Okay, so that is the benefit that any scheduled bank gets if they get included in the RBI under the section 42(6)(a) of. Okay, now implementation of the core financial service solution by Nbfcs. Okay, implementation of core financial services solution by Nvfcs. The RBI has mandated that non-banking financial companies, middle and the upper layer, having 10 or more fixed point service delivery units will have to implement the core financial service solution. Okay, that has been adopted by various banks. So what is core banking solutions? It is a network of bank branches which allow customer to manage their accounts, use various banking facilities from any part, anywhere in the world. Okay, now investment in umbrella organization by primary and urban cooperative banks. Okay, so Reserve Bank of India has exempted urban cooperative banks from 10% cap for their investment in the umbrella organization. So that has been exempted. So the approval allowed urban corporate banks to subscribe to the capital of the umbrella organization on the voluntary basis. So now they have like now they don't have to do that much of investment. So it is on totally they have to do on the voluntary basis. Okay, whatever they wanted to do, they can do on the umbrella organization. Okay, investment law. What is urban cooperative banks? Urban cooperative banks is not formally defined but refers to primary cooperative bank located in urban or semi-urban areas. Okay, so UCBs, primary agriculture credit societies, regional rural banks, local area banks could be considered as differentiated bank as they operate in the localized area. Okay, now so recent development in the urban cooperative bank. So what are the recent development that has happened? So in January 2020, RBI revised supervisory action framework, that is called SAF. In June 2020, the central government approved an ordinance to bring all urban and multi-state cooperative banks under the direct supervision of the RBI. And recently, RBI has appointed a committee that suggested 4-tier structure for urban cooperative banks. So 4-tier structure they have suggested. So tier 1 will all units and a salary earner UCBs and all the other UCBs having a deposit of 100 crore. Tier 2 will have deposit between 100 to 1000 crore. Tier 3 will have a deposit between 1000 crore to 10,000 crore. And Tier 4, the bigger one, is a deposit more than 10,000 crore rupees. Okay. Now, interest equalization scheme on pre and post shipment rupee export credit extension. So Reserve Bank of India has issued a modified norm on interest equalization scheme because of the COVID-19 pandemic for export credit after the extension of the scheme has been done till March. So now the interest equalization scheme has been extended. This has been extended till March 2024. Okay, so the government of India has approved the extension up to March 31st, 2024, and till further review, the extension shall take place from the 1st October 2021. So, revised interest equalization rate under the scheme will now be 3% for the MSME manufacturer exporter exporting any HS line and 2% for manufacturer exporter. The extended scheme will now be not be available to those manufacturers who are already taking the benefit of the PLIs, that is production link initiative. So for that this interest equalization scheme will not work. Okay, those who are working who are already taking the benefit of a PLI, for them there is no interest equalization scheme. Okay, now what is interest equalization scheme? The interest equalization scheme was implemented on 1st April 2015 to provide pre and post shipment export credit to exporter in rupees. At this time, exporter were facing increasingly credit cost as their export cycle is stagnant because the products are not going here and there. So the government has introduced a scheme. Is expected that the export will be able to correct the pricing and improve the competitiveness of their product. So for that, this scheme has been launched. Just 1 minute. Now, Exim Bank has given again line of credit to $7.29 million. Understand this, to the government of Cooperative Republic of Guyana. Okay, to 7.29 million is important. Which country it has been given, that is important. Okay, so Exim Bank has coming into an agreement with the government of the Cooperative Republic of Guyana. Okay, so they wanted to do a line of credit of $7.29 million. Okay, for the purpose, what is the purpose? What exactly is the purpose? For procuring and installing 30,000 solar home lighting system. Purpose also you should know. Okay, this word is a line of credit to Goena, 7.29 million. For what purpose? The main purpose is to install 30,000 solar home lighting system. Okay, okay. Now, Exim Bank is giving line of credit of US dollar 500 million to the government of Democratic Socialist Republic of Sri Lanka for making available the later government of India supported line of credit of US dollar 500 million for the purpose of purchasing the petroleum products from India. As you all know that Sri Lanka is in the state of crisis, so that is why Sri Lanka has to go into the loan facility. They have to take the direct loan from the India, that is called line of credit, okay, for financing and purchasing the petroleum products from India. Okay, so you should know that how much money is there and for what purpose that money has been used. Okay, now formation of new district in the state of Meghalaya. So there is a new district that has been formed in the state of Meghalaya, very important, and there the lead bank has been given the responsibility for creating a good network of banking over there. So lead bank is Punjab National Bank has been given the new charge as a lead bank in the new district of Meghalaya. Okay, so Punjab National Bank is assigned the responsibility of lead bank for the newly created district of Eastern Western Khasi Hills in Meghalaya. East West Khasi Hills, West Khasi Hills are carved out of the elsewhere West Khasi Hills. Oh, okay, so there is no change in the lead bank responsibility on any other places except this places. So what is this lead bank? The lead bank scheme is a scheme where aim to provide adequate banking and credit in the rural area. It is like a service area approach that you have given now we have created this new place, so I just wanted that somebody take lead in forming this place. Okay, so that is that's target that lead has been given to the Punjab National Bank for the new district of the Meghalaya. Okay, now master circular on self-help group bank linkages program. Just a smart note, a model of self-help group bank linkages program, a cost-effective mechanism formulated by providing financial service to the unreached and undeserved poor household. The program was started at the initiative of the Nabard in 1992. Okay, so as to link the unorganized sector with the formal banking sector. Okay, now cassette swap in ATM. Okay, in ATMs there are cassettes which store lots of information and data. Okay, so Reserve Bank has extended the timeline, like now you can implement the cassette swap in all the ATM bank by 1 year, like extended, so till 31st March 2023. Okay, so this is the second extension of the timeline that has been given. So what is this cassette swapping technology? So if the question asks like what is cassette swapping technology is utilized in which place, so your answer will be ATMs. Normally the question will be like that. Okay, so the cassette are equipped with the onboard smart strip, okay, which store carry variety of information like how many notes are contained in the cassette, note currency, denomination, and history, error codes, and all these things are there. That is like you can say that storehouse for a ATM card. Okay, storehouse, like all the information if you wanted to take out, like what time, at what time, who come, have what come, how much currency note that person has taken, how much currency is there, is there any error note come, or is what happens. So everything is stored in the cassette. That is like a smart chip over there. Okay, now bilateral netting of qualified financial contracts. So the bilateral netting of qualified financial contract has been enacted with an aim to create a unambiguous legal framework to close out the netting, which would reduce the credit exposure of the bank. Okay, so what is netting? Netting means determination of net claims or obligation after setting off or execution of all the claims or obligation based on arising from a mutual dealing between the parties to the qualified financial contract. Okay, nothing that much to remember over here, but you just know that if something comes like netting, so you should know what is netting. Okay, and RBI like they will give you some different words. Okay, so which word is utilized in the RBI, so you can use you can say that netting word is used in the RBI. Okay, for credit exposure of the bank. Now, lead bank scheme. The lead bank scheme is a scheme that aims to provide adequate banking and credit in rural area. It's like a service area approach. Here, one bank is assigned for one area. It was introduced in 1969. These things are important. Service area approach important. Okay. So, on the recommendation of the Gadigal Study Group, okay, and Bankers Committee, the scheme was introduced by the RBI. Okay. So, as per the studies by the committees, it was found that the rural area were not able to enjoy the benefit of banking. So that is why the lead bank scheme has been given. So right now, as you can see, that we have talked about the Meghalaya. In the Meghalaya, Punjab National Bank, a new district has been formed. So Punjab National Bank has been given the charge of the lead bank. Okay. Then Usha Thorat Committee on the lead bank scheme. Okay, so you should know that there are two committees. One is Gadigal Committee and another one is Usha Thorat Committee. So it is also a high-powered committee, was constituted by the Government of India and was headed by the Usha Thorat. She was the former Deputy Governor in order to suggest some reforms if they wanted to do in the lead bank scheme. Okay? Yes. This is how you remember the things. Now section 24 and section 56, why I wanted to utilize this word, section 24 and section 56. It is regarding the maintenance of the SLR. Okay, so under Banking Regulation Act of 1949, section 24 and 56 tells about the maintenance of the SLR. Section 25 and section 56 of the Banking Regulation Act of 1949 mandated all scheduled commercial bank, local area banks, primary urban cooperative societies, state cooperative banks and central cooperative banks in India to maintain the SLR. So this is under section 24 and section 56. Okay. Now, compliance function and role of chief compliance officer for non-banking financial companies. Okay, so Nbfcs, those who are in the upper layer and the middle layer, they have to put in place the board approved policy. That means board approved policy for appointing of the chief compliance officer, latest by April 1st to 2023 and October 1 2023 as per the latest circular that Reserve Bank has set. Okay, then Basel 3 norms regarding the liquidity coverage ratio. Okay, RBI has decided to permit banks to recon government security, the level 1 high quality liquid assets, that is HQLA, for liquidity coverage ratio. Okay, so total HQLA carve out from the mandatory SLR will be 18% of the NDTL. Okay, so this circular is applicable to all commercial bank, other banks and regional rural banks and local area banks and payment banks. Okay, so Basel 3 frameworks are being introduced in 2009 because in 2008 financial crisis has happened and still we are trying to cope up with that. Okay, so Basel 3 norms has given like you have a window of 3-year period in order to adapt all the things. Okay, so Basel 3 norms has introduced a strong capital ratio. So they have tell that tier 1 capital how much you have to maintain from 4% to 6% and minimum common equity tier 1 capital from 4% to 4.5%. Okay, so what is this liquidity coverage ratio? So liquidity coverage ratio is designed to ensure that banks should have sufficient reserve of high quality liquid assets so that if any problem happens to the bank can easily liquidate that and bank can come out of the problem. Okay, so it allows them to survive the period of significant liquidity stress lasting 30 days. That means you should have that much of high quality liquid assets so that you can sustain for 30 calendar days, because in 30 days you can manage some resources from somewhere or the other place, right? Then limit for investment in the depth and sale of credit default swap by the foreign portfolio investors. So the Reserve Bank of India has revised the limit for investment in the depth and sale of the credit default swap, that is CDS, by FPIs. Okay, so the investment limit for 2022 and 23 for FPIs in the government securities, state development loans and corporate bonds shall remain unchanged at 6%, 2% and 15% respectively. Okay, so this data is important. Then legal entity identifier for borrowers, LEI, it is like a number. Okay, so the Reserve Bank of India has extended the guidelines on legal entity identifier to large borrower of the NBFC. That means you should have a legal entity identifier number if you are a large borrower of the NVFCs. Okay, so the RBI further advised that no individual non-individual borrower enjoy aggregate exposure of rupees 5 crore and above from banks and financial institutions shall be required to obtain LEI codes as per the given timeline. So as per the timeline, the borrower who is having an exposure of rupees 25 crore are required to obtain the LEI by April 30. Okay. So LEI is a 20-digit number, uniquely identify party and financial transaction globally. It was conceived as a key measure to improve the quality and accuracy of the financial data. Okay. Now, issue and regulation of the share capital and security state cooperative banks and district central cooperative banks. So, RBI has allowed rural cooperative banks to raise fund from the people in the area of operation or existing shareholder through preference share and debt instruments. Now, RBI has allowed the rural cooperative banks, they can raise the money or fund from the people in their area of operation or existing shareholder through preference share or debt instrument. Okay. Now, a scaled based regulation for NBFC, capital requirement for non-banking financial company upper layer. So that is applicable from October 22 yet to come. The RBI has announced that scale-based regulation framework for NBFCs, replacing a vastly scattered governance regime. Okay, so under the notification, RBI has mandated that NBFC UL, that is upper layer, shall maintain an ongoing basis of common equity tier 1 at least 9%. They have to maintain CET1 of at least 9%. Okay, upper layer. Okay, so what is this common equity tier 1 capital? Common equity tier 1 capital includes core capital that banks holds in its capital structure. CET ratio compares the bank capital against its risk weighted asset ratio. Okay, so the core capital of the bank includes equity capital, disclosure reserves such as retained and earnings. Okay, so more the value of this ratio, more safer the bank is. Okay. So guys, we have reached to our last of our session. Anybody wanted to ask anything? Tomorrow we will be having the last lesson, that is budget. Tomorrow we will be discussing budget, some important facts, figures, everything we will be giving you over there. Okay, for the budget, and rest 2 days you have to prepare, and I think Friday you have an exam, right? So anybody wanted to ask anything? So no doubts, fine. But whatever I have told, like this, you have to remember this fact. You have to remember this like this value. You have to remember all these things. Please make sure that you should remember all the things. Okay. Anybody has any kind of issue or anything, they can just ask me. Shrey Jaiswal, sir, schemes, do we need to cover any apart from what you have? Please focus on the main scheme that were there in the news since 6 months. Okay, we have already told you regarding the 4 months of the schemes. Okay, so we have already told you about everything. So main schemes we have already told, like this can be the expected scheme that you can get in the examination. Okay, so please go through my lecture, like I have taken around, this is the 7th lecture and tomorrow is going to be the 9th lecture. So please go through all my lectures and just note it down, like some figures, like values and all the things are there. You just have to remember that. Okay, because last 6 months are very important as per exam point of view, because from that only most of the things are happening. Okay, because the examiner also prepare the question paper in such a format that like if something really important has happened, because the examiner is having 80 questions in the hand. Okay, 80 questions, right? Examiner has to prepare the static question also, dynamic questions also. Okay, so you can expect like quality questions from the examiner. So quality question is something which examiner wanted to ask, like which is a recent phenomenon, which has done some, like some target has been achieved. or some good amount of time has been spent. Okay, so importance of the scheme has to be checked. Okay, you do not have to go for very older schemes, and then you are just looking like, okay, this can be asked or not. You have to look for, like, if some scheme has achieved some target, or some new scheme has been merged into some any other thing. Okay, so make sure that you do a selective study. Do very selective study. There is no time to study right now. You have to revise selectively. Okay, revise selectively. And if your preparation are very good, if your preparation is good, then even if something comes here and there also, you will be able to do, if you will be able to solve with the help of logical reasoning of that answer. Okay, you will be able to solve that. Okay, just have a photographic memory of everything in your mind. Just have a photographic memory. Okay, anything else, Raju, Shrejal? Okay, fine. Fine. Okay, fine. So anybody else has any question? Fine. So we will be meeting you tomorrow at again same time, and tomorrow will be the last lecture. And please, thank you so much, and thank you for joining the lecture. It's great to see you all over here. Tomorrow we will be finished the budget session, and in the budget also I will be telling you some of the important things that you have to remember, and just then finish it off. Then start revising. Okay, selective revising. Okay, till then, thank you so much, and invest your 100% and trust the process, and you will be successful in the examination. Don't worry about it. Okay. Thank you so much. Bye bye. Thank you.